Today, I will teach you everything you need to know about triple net lease investment properties and how you can invest in one like a true savvy commercial investor. If you are new to my channel, my name is Jas Oberoi and I'm a real estate agent, investor, and a serial entrepreneur. I went from working as a server to owning multi-million dollar worth of real estate portfolio in just 8 years. In my career, I have helped hundreds of my clients buy over 900 million worth of real estate using tried and tested strategies, and I am here to share those tips with you on this channel. Whether you are just stepping into commercial real estate or transitioning from residential, getting to know triple net leases properties is going to be a game changer. In today's video, I'm going to show you the best headache-free investment strategy that will generate you long-term income with minimum involvement from your side. As always, no fancy jargon or confusing terms. Let's start with the basics. There are two main types of leases: gross and triple net leases. Gross means everything is included. So if your tenant is paying you $3,000 a month, whatever they are paying, all the expenses are included in it. It doesn't matter how high your property taxes goes down the road or any other expenses comes in, that you have to pay from your pocket. Tenant doesn't pay anything extra than whatever is settled the amount is. That is a gross lease. The other kind is my favorite kind that I use for my investment portfolio, and I also tell my clients to use it, which is triple net leases. What is triple net real estate? Properties with triple net leases is where the tenant is responsible for paying all the operating expenses, so everything from property taxes, insurance to maintenance. You, the investor, will only collect rent while the tenant covers all the expenses. Now, these properties can be a building with a single tenant or one with the multiple tenants in various industries. Benefits of investing in triple net real estate. So why triple net leases are my favorite? Because it gives a consistent and reliable income stream. These leases are locked in from anywhere between 5 to 10 years, meaning you can rest knowing that money is coming in and covering your operating expenses. Even the property taxes or maintenance costs are going up because that is tenant's responsibility, not yours. Unlike residential leases, there are no caps on the leases rate increase, which means your income can grow significantly over time. What to look when buying triple net leased properties. Now that you know triple net leases are great, let's talk about how you can evaluate if it is a good buy. You want to look at the things like tenants' credit, lease length, lease rate increments, terms of the lease, and the location. Essentially, you are buying the income from the lease, so understanding lease details is a key. Ideally, you want tenants that are big national retail chains, banks, pharmacies, doctors, or any business that has a good track record. Financing a triple net real estate investment. So guys, once we have decided the tenants are solid, next step is getting your financing sorted. Financing triple net properties is a lot like other commercial deals, but working with the lenders who understand triple net investments makes a huge difference. Why? Because specialized brokers know how to structure deals for the lenders, can get you the best rates and make the entire process much smoother since they know exactly what they're dealing with. Risks associated with triple net real estate. Now you're thinking that's great, Jas, but what about the risks? As surprising as this sound, these investments are one of the safest and headache-free investments. Let's say a tenant defaults on a rent. Don't worry about it. Commercial leases are landlord-friendly, unlike residential. Most of the time, you have their personal guarantees, so you can go after their personal assets. They can't just walk away without consequences, and the tenants know this. And let's say tenant decided not to renew their leases. Not a big deal, because they have to tell you 8 to 10 months prior to the lease expires so that we have enough time to advertise it and find a new tenant. But the thing is, with businesses, if a tenant is running their businesses at the location and is going well, they will not be thinking of moving to different location because it works for the business and they are making money. This is why triple net properties are considered one of the most secure real estate options out there. The investor's role in triple net properties is passive. As a triple net investor, you are mainly a passive player. Once the property is leased, you are mostly collecting rent and taking care of small things about the maintenance of the property. That's why triple net investments are called mailbox money. Your responsibilities are limited, but the incomes keep flowing and the properties keep appreciating in value. This stability is appealing to investors and drive up the demand of triple net properties, resulting in appreciation of your investment. Finding triple net real estate opportunities. Now your question may be, where can you find these investments? Yes, it's a little difficult to find these properties since most commercial properties are off market. But what you can do is look into real estate marketplaces, network with other investors, or work with a commercial real estate agent who has experience with triple net deals. A real estate agent who specializes in triple net deals has the connections to find them for you. If you like today's video, be sure to check out my video on cap rates and how triple net leases play a big role in determining cap rates. Please do like it, subscribe, and tap the bell button so you don't miss the future videos. Until then, see you next time.